Now, with increased geopolitical risks, tighter global financial conditions, climate change and possible regional instability stemming from scheduled elections, Absa CIB increasingly notes resulting growth divergences across key African economies. East Africa, however, remains an outlier, and Ridle Markus, Sub-Saharan Africa, a macroeconomist at Absa CIB, joins us with more insights. Ridle, it's always a pleasure. Thank you so much for your time.
Good afternoon.
When we speak about growth divergence, Ridle, paint a picture for us to help us understand exactly what we make reference to here.
So part of the issue for the region is, of course, that some of the markets, as I pointed out, are doing exceptionally well. East Africa in particular, I think, is doing very well. We've got Uganda growing at 5% plus, Kenya at just over 5%, and Tanzania also driving, seeing growth of just over 5%. Those three markets, even pre-COVID, those three markets did fairly well, and we expect those markets to continue to do well. Combination of improved weather conditions, infrastructure investment, and particularly the oil story and the LNG or the gas story that's going to drive those three markets. However, my big concern here is that some of the region's largest markets are not doing so well. For example, Angola, where we are likely to see growth of 0.4% this year. And that is not just my expectation, it is also the expectation of the government of Angola. 0.4% growth. Nigeria, growth bigger than last year, 2.7% this year. And we know, and while it's not a core focus of mine, is that African growth rate is also probably going to be less than 1%. So that in itself tells you that some of the larger markets pose a huge growth risk to the continent. Some of the smaller markets, like the markets in East Africa, doing well. Southern Africa as a whole not doing so well, with Namibia, Angola, Botswana, Zambia, all having some kind of challenges that's weighing on these markets. And then, of course, you've got Nigeria, Ghana, where those are recovering stories, but still stories is very difficult at this point in time, and it's going to take a while before we're going to see real positive momentum coming through from those markets.
Right, I must ask you about economic scarring post-COVID-19 or as a result of COVID-19. Are we seeing a lasting impact here? It sounds like, some economies were battling already post-COVID-19, but COVID-19 was a real ultimate disruptor and nothing has been able to be mended, since the pandemic. Are we seeing economic scarring in some of these economies, Angola, Nigeria, to name a few?
That's exactly it. Some of these markets, as you pointed out and as I highlighted earlier, were already struggling pre-pandemic. There was a huge concern around debt, and there was lots of subsidies that came from these markets trying to cushion the impact of high inflation. Even before the events of 2022, that as a result of the Russia-Ukraine war, we saw inflation escalate. We had many of our markets supporting vulnerable households. The pandemic, of course, caused a huge increase in debt and debt vulnerabilities, and fiscal positions weakened sharply. Now, these economies are struggling, and as to answer your question, there is a lasting impact. We're going to take many, many, many years before we are actually going to get back to where we were. We estimate that our economies will probably only get to the levels that we saw in 2019, maybe in the next year or two. And so we're playing catch up at this point in time, and then we still need to now show some real growth. A simple example will be your tourist economies. Mauritius, it is already 3 years after the pandemic in 2020, and they still haven't recorded the number of tourists that they saw in 2019, for example. We hope that that will happen maybe next year only. So there's some way to go, and it doesn't help when you've got the Middle East crisis as we have at the moment, and of course the Russia-Ukraine crisis that continues to pose a huge risk. That these economies are, still very vulnerable, and the impact of the geopolitical risk can still be fairly severe over time. So that's, it's going to take a while before we catch up to where the economies were pre-pandemic.
I'm also keen to get your thoughts on issues that we've seen with a currency depreciation around the continent. And of course, a lot of that is responding to some of the geopolitical issues that you mentioned and just a global economic environment that's also quite difficult. But Ridle, in my mind, the dependence on the US dollar and how it operates is something that a lot of African economies just can't escape. And so even in pursuit of better growth, is this always going to be as risky for us as it is today?
So our currencies have always been on the back foot. However, the pandemic has certainly made it worse. Now we've moved away from the pandemic, trying to recover, but there's just not enough FX in these markets or foreign exchange in these markets. So you've got foreign exchange shortages in Nigeria, Ghana, Ethiopia, Kenya, Tanzania, quite a few markets. So, and then you've got a potential that the US rates could go even higher, tight global financing conditions persist. So very little inflow in some of these markets at least. And that just makes the situation so much more difficult. And it also means that with currencies on the back foot, that your inflation remains under pressure. And we've already seen Zambia hike the policy rate earlier this week, or last week at least. And also Angola hiking the policy rate. We've got Nigeria potentially also needing to hike further. Currencies are putting additional pressure on an already challenging inflation environment where food insecurity is a feature across the region, and food prices notoriously high across the region. So it doesn't help when currencies are under this much pressure. We'll have to wait until the dollar weakens further, global conditions, type financial conditions at least, improve further so that we can start issuing Eurobonds again and hopefully get some extra foreign exchange in. Not an easy situation for many of our markets at this point.
All we can do is watch that, Ridle. Thank you for taking us through this and also painting this very comprehensive picture for us. It's always a pleasure speaking to you. That was Ridle Markus, who's Sub-Saharan African macroeconomist at Absa CIB.